Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, September 8th, 2023. So I just wrapped up the premium video for the folks in the gold room, and it was one of the shorter videos that we make. You know, normally my videos go about 20, 30 minutes for the premium folks. This time it was about 15, and the reason it was a short video is because not really much has changed from the last time that we spoke. And that applies to you guys here on the YouTube as well. So last time that we spoke, we had said that, you know, you're basically in just a giant glorified trading range on the SPX. It is a very large range. It's roughly about 200 points. So again, the main thing I can bring you here that I think is going to be beneficial to you is just a reminder of how to trade in a trading range, and then the two key levels that I'm looking at. And I'm just going to use the SPX as a proxy for basically everything. So on SPX, the level has not changed, 45.35. You can see how well that worked. As the recent high, and then the lower level that I'm going to give you is actually 43.12, which is a very major 618. So until we break this kind of zone here, everything that happens between these two points is just going to be mean reversion. So mean reversion basically means that you know, you kind of saw it this week. You know, if we open down like this, the market likes to pop back up and then do nothing, right, the rest of the day. If you pop up like this, the market likes to move down to back to the mean and then do nothing, right? And that's really the way you have to trade it, because if you start trading it like this is going to be a breakdown that will continue, you know, all your puts go to crap by the end of the day. Same thing over here. If you buy this, you know, early morning strength with calls, well, by the end of the day, your calls go to nothing too, right? So the adjustment is actually somewhat simple. It's shrink your time frames like we've been talking about. You know, in this case, I have a weekly daily. I think that's far too slow for this market. So if this is something that you're comfortable with, using the weekly and the daily kind of as a combination of anchor and trigger, maybe consider, instead of the weekly, using an hourly as your main chart. And this is just what I'm doing. And then a 15-minute to steer the car, if you will. Right? And then that way you can circumvent all of the nonsense that's happening on the weekly and the daily, because you don't have a trend, right? When you don't have a trend, you want to be very, very careful with buying longer dated stuff, because you're just going to get chopped up in this. You know, one day it'll be up, one day it'll be down. And if you could take advantage of those swings by using smaller time frames, it does make a lot of sense. In terms of the weekly chart here on the SPX, you know, you're still kind of in a compression phase here on your squeeze. Meaning that you've kind of run out of that impulsivity to the upside, and that again works in line with more chop. Usually best case scenario is chop until you get the next squeeze, and then you can try to get the breakout from there. So aside from that, I didn't really see anything too interesting doing the premium video with the folks in the gold room that's worth showing you. Last week, you know, I brought a couple of picks your way. I told you about Berkshire, I told you about XOP, I told you about ConocoPhillips. I would continue to reiterate those names because they are still very good. I would add Valero, and then I would also add the FANG stocks. And that's really the only places that I see actual outperformance is going to be in the energy sector, and then in something like the FANG stocks, you know, Amazon, Google, things like that. So hopefully it's helpful, guys. I know it's a little bit dull, but that's something that we can certainly work with as long as we adjust, right? The main thing with markets is to adjust and dance to the song that is playing, not the song that we wish was playing. So, and that's okay, right? We have a way to adjust for that. We have plenty of good indicators to tell us when to adjust, and this is just one of those times that we just have to adjust, shrink our time frames, be in and out a little bit more quickly, and be willing to kind of wipe the slate clean every day and day trade until this gets figured out. And that's perfectly okay. You know, as long as you have the right plan in play, then you'll still do well. And then once we get the next setup for a breakout or a breakdown, then we can kind of get back to the old way that it was. All right, guys. Well, that is my time. Before you go somewhere else on the YouTube, be sure to leave us a like on the video if we found it helpful. Maybe not just this week, because there wasn't a lot to talk about, but maybe the last 2 weeks. I think certainly our videos on Friday have been especially helpful. So drop us a like on this one if you if you like the content. All right, guys. Appreciate it. See you next time. Have a great weekend. Cheers. Hey, traders. This is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.